Alright, Assalamualaikum warahmatullahi wabarakatuh. Okay, so we continue uh, with the different types of efficiency this time. Okay, right. Now we want to go through the different types of efficiency definition. Okay, right. Previously, we have assumed that the market respond immediately, right, to all available information. So that is what we define or how we define the market efficiency, right? Actually, it stated that certain information may affect stocks prices more quickly than other information, right? To handle differential response rates, researchers uh, have separated information into three groups that are informations on past prices, that is the historical stock prices, okay, and then into publicly available information. So this information is referring to the historical stock prices, the past stock prices, information from the annual report, newspaper, and etc. In other words, the information that is publicly known or available. Okay, right. The next one, all information that is the information which includes private information and public information. Okay, that means all information that is private and public informations are available to investors. Okay, no more secret between the company and the investors, right? In other words, as well, the investors can what is it? Access the private information, okay, from the company. Okay, now we go to this part. Right, there are three different types of efficiency: a weak form, a semi-strong form, and strong form. Okay, we go one by one. Okay, we go to weak form first, and then followed by semi-strong form, and then strong form. Okay, now we want to see what's the meaning of weak form. Okay, before that, right, you can see this whiteboard, right? So generally, what we've done, okay, before in the previous video, I have defined the meaning of the efficient capital market, right, or efficient market hypothesis. So efficient market hypothesis actually implies apa? It implies what? It implies the stock's price, okay, fully absorb or fully reflects, okay, and quickly absorb or reflect, okay, what is it they reflect to, or the stock's price reflect to, that is reflect to all available information, where this information actually can be categorized into three just now. That is, it can be historical stock price, the past stocks prices, okay, or all publicly available information. That means public informations only, right? Or publicly available information that includes what? Historical stock price or past stocks price, right? Information from annual report, information from newspaper, right? Internet, and etc. And also, stocks price will fully reflect another types of information, that is all information that include public and private information. Okay, right. And then what is the implication when the stock's price reflects this information, right? So the stock's price, as a result, okay, the stock's price will always be at a fair price or correct price. Okay, due to the reflections, okay, to the um, information available. Okay, now when we want to divide the market efficiency here into three different forms, right? That is weak form, semi-strong form, and strong form. We will look at the types of information that the stock's price reflect to. Okay, which is right. Let me show you. Okay, so now let's say the stock's price number one. Let's say the stock's price. Okay, how to show it? The stock's price fully reflect and also quickly reflect or absorb the information, right? But this time, let's say the stock's price only fully reflect and quickly respond, okay, to the historical stocks price only. These types of information. That means the stocks price, number one, okay, fully reflects and quickly responds to available information, and let's say that available information is the historical stock price. So that means the market efficiency is in the weak form. Okay, right? So the stock's price fully reflect, right, and quickly respond to available information. And let's say the available information is only the historical stocks price. Okay, therefore the market is efficient, but it is efficient in a weak form. Okay, in a weak form efficiency. Okay, why is that? Because it's only fully reflect to these types of informations only, which is historical stocks price, but do not reflect, right? The stocks price do not reflect this information and do not reflect this information. Only take into account or absorb the stocks price only absorb these informations only. Okay, right. That's why we say that our market is efficient but very minimum, which is called as weak form. Okay. Okay. What happened if the stock's price, let's say, okay, if the stock's price at this time fully reflect and quickly respond to the available information, but this time the available information is the what? The second types of information, which is all publicly available information. That means all public information, such as right historical stock price, okay, informations from the annual report, Okay, information from newspaper, internet, what else, magazine, and etc. Okay, so we say that the market is efficient, but this time it is efficient in what form? It is efficient in the semi-strong form. Okay, right? So that means the market is efficient, but efficient in the semi-strong form, right? Because the level of information has increased, right? The information absorbed by the stocks price has increased from the historical stocks price. Now it's absorbed all the public informations available in the market. Okay, right. So that's why it upgrade to semi-strong form. Okay, what happens if the stocks price it reflects all information? That means all available information. This available information is referring to public and private. So the stocks price, number 3, right? So number 3, if the stocks price, okay, fully reflect and quickly respond, right? Quickly respond to available information, all available information, but this time the available information is public and private information, okay, which is all information. So that means the market becomes stronger now, okay, strongly efficient. So that means the market is efficient, but this time very, very efficient. So that's so called as strong form. Okay, strong form efficiency. Why is it become strong form? Because the stock's price absorb all this information. Right? The investors can access public information from the company and also can access the private informations of the company. Okay, so the private information now become knowable. So now there is no secret between investors and the company because all information now becomes public information. Okay, so therefore more informations are absorbed into the stocks price. So that's why market becomes stronger, right? That's so called as strong form efficiency. Okay, right. Let's go back to the slide. You can see here, right? Weak for market efficiency. This is a definition, like I mentioned just now. The weak form efficiency implies that the stocks prices reflect all information found in past prices, okay, in past stocks prices and its volume. Okay, so if the weak form of market efficiency hold, that means if, right, the weak form efficiency exists or hold, then we could say that the technical analysis is of no value. That means useless. That's why we need to understand what's the meaning of technical analysis. Okay. First thing first, you need to know what is the definitions of technical analysis. Okay, so technical analysis is an analysis, right, or a study of the past stock prices. That means we study the movement of the stocks price. Okay, the movement of the past stocks prices, yesterday stocks prices, or we study about the stocks prices for 14 days, right? Starting last 2 weeks. Okay, and then we make the investment decision. So if you are using this technical analysis, so this technical analysis is actually of no use. Okay, is useless in the useless to the investors. All right, to the investors in the weak form. Okay, in the weak form efficiency. So that's why I mentioned just now, right? Technical analysis is useless to the investors in the weak form efficiency. Why is that? Because all informations found in the past stocks prices are already absorbed into the share price. Okay, right. So bear in your mind. Okay, now we go to the next slide. Okay, right. Since stocks prices only respond to new information, which by definition here arrives randomly, so stocks prices are said to follow a random walk theory. So random walk means the random component in the current period, right, is unrelated to random component of past periods. That means, right, the stocks price, future stocks price is unpredictable. Okay, right. In the weak form or in the efficient market, right, the stocks price is actually unpredictable as it follows a random walk hypothesis or a random walk theory. So that means we cannot rely on the yesterday's stocks price, okay, to predict tomorrow's stocks price. So let's say yesterday's stocks price increase, so you cannot make tomorrow's stocks price going to be in decrease, right, or vice versa. Okay, so that is what we mean by random walk theory. Okay, right. This is the explanations of why the technical analysis fails. Right. I think I have mentioned just now. Okay, technical analysis is the study of the past stocks prices. Right. And then these past stocks prices are already absorbed into the stocks price. So therefore, it is no use for this analysis is no use or useless, become useless to the investors, okay, to um, make the investment decision, okay, or to determine the future stocks price, okay, or to predict the future stocks price. Okay, right. Now we go to the semi-strong form market efficiency. Right, semi-strong market efficiency is where, right, the stocks prices or security prices reflect quickly all publicly available information. Right, so this is what I mentioned just now on the whiteboard here. Okay, this one, right, where I mentioned just now the stocks price, right? If the stocks price fully reflect and quickly respond to all publicly available information, right? To all publicly available information, right? Where this information comes from the past stocks prices, annual report, newspaper, and etc. So that means the that means the market is in the semi-strong form efficiency. Okay, right, let's go back to the slide. So this is what we meant by this sentence. All right, security prices reflect all publicly available information. Okay, and the publicly available information includes the historical prices, right, the past stocks prices, and then published accounting statements such as annual report. Okay, any information you get from the business news, okay, and then information found in annual report, seen as the second one. Okay, so that is what we mean by publicly available information. And this information, right, already absorbed into the stock's price. Okay, right. And then when we mention that, right? The semi-strong form market efficiency implies that the stock's price quickly absorb and fully absorb all the publicly available information. So this will make, or this will result in that the fundamental analysis become useless, right? Fundamental analysis become useless to investors. And plus technical analysis. Okay, fundamental analysis and technical analysis. Okay, also useless. Okay, right. Both analysis become useless to the investors if the market is in the semi-strong form. Okay, right. So what's the meaning of fundamental analysis? So here we need to know the definition of fundamental analysis. Right? So what is the fundamental analysis? So fundamental analysis is a study, right, about the company using all available information. Okay, right? Fundamental analysis is a thorough, okay, ROUGH, a thorough study. That means it's a complete study, okay, about the company from A to Z using of the company or of stocks, okay, of company, okay, using all available information, okay, right. And these informations are actually already absorbed into the stock price, okay, right. So that means since this information, the informations that you are using here in this fundamental analysis or the informations that you refer to, okay, already absorbed into the stock's price. So that's why this fundamental analysis become useless. Okay, that means the study shows that the investors cannot beat the market, right, in order to make the extraordinary profit by using the fundamental analysis plus the technical analysis. Okay, right. In the semi-strong form, market efficiency, fundamental analysis, and technical analysis are useless. Why is that? Because all information, right, in these two analyses, right, such as information such as what? Historical stocks prices, financial performance of the company. Okay, so all these informations actually are already absorbed into the stock's price. So there is no special about this analysis anymore to the investors. And this analysis cannot be used by the investors to beat the market or, in other words, to make the extraordinary profit. Okay, right. Next one, we go to the strong form efficiency. Okay, the strong form efficiency, okay, implies that, okay, the stock's prices reflect all information, right? What informations are absorbed into the stock's price? Public information and private information. Okay, right? It is these two information are fully reflected in security prices. That means the stock's prices already absorb these prices, this information. Okay, right. So here, if we put in the diagram, right, you can see that, right, here, right. So look at the smallest circle here. That is representing information set of past stocks prices. That means if the stock's price fully reflect, okay, if the stock's price, okay, fully reflects and absorb, okay, this information that is in past stocks price informations. That means our market is efficient, right? Efficient, but in a weak form efficiency. That means very minimal, okay, weak form efficiency. Market kita efficient tapi very minimal, right? And we have other information that are not absorbed into the stock price. That means information other than this, right? Other than this one, the confined region here, the smaller circle here, right? Like information from annual report, information from the newspapers, other than past stock prices, and also plus the public information. That information are not yet absorbed into this stock price. So that means this stock price will be useful to the investors to make the extraordinary profit. Okay, right. The next one, if the stock price fully reflect to the second circle. Yeah, all right. If the stock price fully reflect and also absorb this information, right? The second information here, which is including the past stocks prices. So you can see that the past stocks prices is a past stocks prices information is a subset of the publicly available information. Okay, so this one. Okay, so if the stocks price absorb all these two types of information that publicly publicly available information which come from the past stock prices, annual report, and etc. Now the market efficiency become stronger, but this time it becomes what? Semi-strong, not fully strong. Okay, semi-strong efficiency. Why is that it's only semi-strong? Because we still have other information which is not yet absorbed into the stock price. That is private information. Okay, that is private information. Okay, it's still not yet included or absorbed into this stock price. Okay, right. So therefore, the market can only be a semi-strong form. Okay, next, if the market, all right, um, let's say here, right, let's say the stock's price now fully absorb the bigger circle here. Okay, the stock's price fully absorb and fully reflect and absorb, okay, all information here. So all information here, which is what? In yellow color here. So all information just now I mentioned includes what kind of information? It includes private information plus public information. Now there is no secret between investors. All secrets of the company, all right, that you obtain from the company already absorbed into the stock price. Now your market become stronger, right? Okay, so that means the market now become strong form efficiency. Okay, strong form efficiency. Okay, so that is where I mentioned just now there are no such thing as secret, right? Strong form efficiency says that anything relating to the stock and known to at least one investors, that means once it becomes rumors, right? Any secrets of the company become rumors, right? Um, this information will be quickly respond or incorporated or absorbed into the stock price. Okay, so no one can constantly now beat the market. Just now, right? If the market is in a weak form, right? The investors can still make an extraordinary profit, right? Provided that the investors have other publicly available information plus private information. Okay, understand? Okay, hold on. Let me show it to you on this whiteboard. Okay, now let's say, okay, now the stock's price, okay, market is in week form, right? That means stock price only reflects fully, only fully reflect and absorb the past stock prices. Okay, so this is week form. That means here, okay, week form. Okay, it's only absorb the past stock prices, this information. Okay, here, right. So, is there any opportunity, right, for the investor to make an extraordinary profit, or is there any opportunity for the investors to beat the market? That is what we meant by beat the market, making the extraordinary profit. Is there any possibility, or is there any opportunity for investors to make an extraordinary profit? The answer is yes. There is an opportunity for investors to make extraordinary profit. How is it? Right? The investors must get or must obtain other information, right? Selain daripada past stocks price. That means, yes, provided that dengan syarat the investors, right, can obtain other information, right, such as private information, and then what else? Informations from annual report, okay, and etc. Not informations found in the past stocks price. The information from the private information, or annual report, or any other sources of information which is other than this one. Okay, so therefore the investors can use this information to make an extraordinary profit. Okay, so that is what we meant by the investors can make an extraordinary profit by doing or making fundamental analysis. Okay, so in other words, fundamental analysis is useful in the weak form efficiency, right? Fundamental is useful in the weak form, okay? And it can help the investors to make an extraordinary profit and also to beat the market. But, right? However, okay, the technical analysis is useless, okay, in the weak form. Why is that? Because technical analysis is the study of the past stocks prices. So no use for us to study these past stocks prices anymore. Why is that? Because these past stocks prices information is already incorporated or already absorbed into the stocks price. So it becomes useless to the investors, right? It can only help the investors to make normal profits only. Okay, but if the investors do the fundamental analysis, right, in the weak form, right, and these investors use the other informations, right, then this information or this fundamental analysis can help the investors to beat the market and to give them an extraordinary profit. Okay, so this is what happened in the weak form. Okay, right. I really hope that you understand with my explanation, right? If you don't understand or still cannot understand, you can ask me later on. Okay, right now we go to the next part. Right, for the semi-strong form. Okay, for the semi-strong form. Okay, now, so our market is in a semi-strong form. Okay, now, so we know that. What do we know about strong semi-strong form? What is it? Stocks prices fully reflects and quickly absorb what? Information? All public information or all publicly available information. Okay, so what is the publicly available information? So this is what I mentioned, right? That is what? The past stocks prices information. Okay, next, informations you found from the annual report, information you found from the newspaper, okay, and information from you found from the financial statement or any other financial informations about the company, okay, from internet, okay, that means you can get this information mm, or you can access this information easily. Okay, right. So this information actually, right, are already, what is it? Already included into the stocks price. Okay, already included into the stocks price here. That means in this stocks price, it's already have this information. Okay, already take into account that information. Okay, the stocks price already take this information into account. So that's why they get a new price. Okay, right. That means in that case, in the semi-strong form, okay, we know that past stocks price already incorporated in this stocks price. Therefore, it's no use for us to rely on the technical analysis, okay, to beat the market. So that means technical analysis become useless. Okay. And another one is there's no use for us to rely on the fundamental analysis. Why is that? Because fundamental analysis, when we study about company, we will refer to this information. Fundamental analysis, we will use this information to assess about the company's performance, right? So that informations are already included in the stocks price. So that's why fundamental analysis here also become useless. So therefore, there is this analysis cannot help the investor to make an extraordinary profit and also cannot beat the market. But the question here is, is there any probability or opportunity, the right word, right? Opportunity to investors to make an extraordinary profit in the semi-strong form efficiency? That's the question. Now, is there any opportunity to investors to make an extraordinary profit in the semi-strong form, since we know that technical analysis and fundamental analysis are useless now? So the answer is yes. The investors can still have an opportunity to make an extraordinary profit. Dengan syarat, the investors must Investors must what? Get or must have a private information. Why is that? Because this private information is not yet included into the stock price. So that means we still have information left here, which is not yet included into the stock price. So we can make use of this information, private information, right? Um, to beat the market or to make the extraordinary profit. If you think that that private information can help you to make an extraordinary profit by selling the stock, then you will sell the stock. If you make use or if you can manage to get this private information and telling you that the stock is actually what is dropping or declining in future, so you better sell now, then you will sell the stock now before the stock's price really drop, right? Because you get the reliable information from the company, right? Someone who possess this information, that is the private information. Okay, if you get this information, the private information here, and you make use of it in the semi-strong form, therefore you can get an extraordinary profit. Okay, because this information not yet included into the stock price. All right. Just now in the weak form, this information, private information, and the informations from the for the fundamental analysis, which is annual report, newspaper, and etc., are not yet included into the stock price, right? So that's why fundamental analysis and investors, private information become useful to investors. Only technical analysis become useless in this weak form. Okay, but when we go to strong form, okay, when the stock's price fully reflect all information that are private, that means the private now become public information, okay, and then other public information, okay, that means the market is in the strong form efficiency. So now the question is, right, the question here is there any possibility or any opportunity for investors to make an extraordinary profit? Alright, so is there any opportunity now? Since all the information is now already absorbed into the stock price, so there is no other information left now. Everything already is absorbed into the stock price here. So therefore, nothing left, right? In the market now, everything is already absorbed into the stock price. So therefore, the answer is no, right? Because why? All information, it's either public or private, okay? Here already included into the stock price. So here we can make a conclusion that, okay, right, semi-strong form, okay, we prepare a table, right? Let's say fundamental analysis, right? Technical analysis, fundamental analysis, and the next one is private information. Okay, now if you are or if our market Bursa Malaysia is weak form, okay, this is market efficiency. Okay, weak form efficiency. So technical analysis is useless. Okay, fundamental analysis is useful. Private information also useful to the investors to make extraordinary profit. profit. Why is that? Because informations that are found in fundamental analysis and private informations are not yet included into the stock's price. Okay, right. In the semi-strong form efficiency, technical analysis become useless. Fundamental analysis now become useless, but private information become useful to the investors in order to make extraordinary profit. Okay, why is that? All information is found in the technical analysis, which is past stock prices, and all information is found in the fundamental analysis that are including past stock prices, annual report, information on newspaper, and so on, are already included into the stock price. So you cannot make any extraordinary profit using that information. Okay, you can only make an extraordinary profit, okay, in the semi-strong form if you have private information. Okay, right. Now let's say the Bursa Malaysia, our market here becomes strong form. So these three items, technical analysis, fundamental analysis, and also private information, okay, are useless to the investors. Why is that? Because all information in the technical analysis, all informations in the fundamental analysis, and all private information now are already incorporated into the share price, right? So therefore, this is the conclusion, right? um, the usefulness of the technical analysis, fundamental analysis, and private informations to the investors in different types of market efficiency. Okay, right. All right. So now we go to the next part, which will be on the evidence or the test on the efficient market hypothesis. Okay, right. There are empirical evidences to support the three types of market efficiency. Okay, right. We go for the first one for weak form, right? The weak form, the types of tests or the names of tests, okay, done in order to examine whether the past data, right, can be used to predict future returns or not. Right, so this test, okay, right, right, is called as a serial correlation. Right, so these serial correlations are conducted in order to determine whether whether an autocorrelations exists or not between the return at a given point in time and its return in a subsequent time period. Okay, so in other words here, the serial correlation is test, right, used to determine or to find the correlation between the current return on security and the return on the same security over the later period, right? Right. In the other words, okay, the correlation, right? Test weak form here, the serial correlation is actually to determine the correlation, right? Whether or not there are relationship between yesterday's returns and today's return. So that is the easiest explanation we can show you here. Okay, that means we want to see whether there is relationship between yesterday's price and today's price and tomorrow price. That means can we use yesterday's stock's price in order to predict today's stock's price, and can we use today's stock's price to predict tomorrow's stock's price? Can we do that? This can be justified by this serial correlation. Okay, we calculate the serial correlation, right? So serial correlation can be positive, negative, or zero. Okay, so what's the meaning of positive serial correlation? Right, the positive serial correlation is showing that for a particular stock, all right, it shows the tendency towards continuation, all right, tendency towards continuation. That means, for example, if yesterday's stock's price increased, that means we can predict today's stock's price also going to increase. And also we can predict for tomorrow's stock's price that is going to increase as well. So that is what we mean by positive coefficient indicates tendency towards continuation. Okay, if yesterday's stock's price dropped, that means we can predict based on yesterday's stock's price. Okay, today's stock's price is going to drop as well, and then tomorrow's stock's price also will drop. So if we get the positive coefficient, serial coefficient here, okay, of serial correlation. Okay, what's the meaning of if the serial correlation coefficient here is negative? That indicates or that shows tendency towards reversal. That means, right, if we get this kind this value, negative coefficient serial correlation, let's say you get -1, so it shows that the stock's price, if yesterday's stock's price declined, so we predict that uh, today's stock's price going to increase. If today's stock's price increase, then we can predict tomorrow's stock's price decrease. So that means if we have these two types of serial correlation here, that means two values, positive and negative. Let's say this one, +1, this one, -1. That means you can predict the stock's price of the company, right? But we must bear in our mind that if the market is efficient, the stock's price should follow or is following a random walk theory, right? That means what? The stock's price is actually unpredictable. Okay? Right. If that is the case, if the stock's price here, if the serial correlation here is a positive value and negative value, that means the market is not efficient. Okay, right. Right, and then serial correlation coefficient for stocks written near zero would be consistent with the random walk hypothesis. All right, the serial correlations calculated for different companies, right? They found that Coca-Cola, they calculate the serial correlation for many companies. Actually, you can see it in on page 128 and 129. You can see there are a number of companies serial correlation that are calculated in this study. Okay, they found that most of the serial correlations of each company, right, like Coca-Cola, Boeing company, IBM, and other companies, they found that most of the serial correlation coefficient for each company is actually 0.041, 0.038, 0.004, which is near zero. If you round off this figure, right, the serial correlation here is actually near zero. That means almost zero. Even though it gives you a negative, but it's still zero. We consider it as a zero. So that means, right, most of the companies in the market have zero serial correlation coefficient. So what's the meaning of that? Okay, that means, right, that means the stock's price, okay, is unpredictable. Okay, so these findings consistent with the random walk hypothesis, right? The findings of this test, okay, shows a very low correlation coefficient which is near zero. So this evidence shows that, okay, this is consistent with the weak form efficiency theory, okay, where the stock's price follows random walk theory, which is in other words is unpredictable. Okay, right. The next one, we go to the test for the semi-strong form. The test for the semi-strong form here is actually we want to examine how rapidly the stock's price, okay, adjust to new information. So we want to see is the stock's price reflect quickly or immediately to the new information released by the company or announced by the company, right? So we want to see whether there is a quick reaction or quick response in the stock's price to the new information. Okay, so the first one, right? There are two tests for semi-strong form. The first test is the event study, right? We use the event studies test, okay, which is we will examine the the stock's price movement or reaction to new information. Okay, right. So the findings shows that, okay, the findings shows that the security prices reflect the information from the announcement quickly. So the information shows that here, okay, let's say the event that they study is dividend omission, right? There are so many events we can study here actually, includes the mergers event, right? Announcement, and then takeovers announcement, dividend increase, earnings announcement. Those are the event that the researchers can study on. Okay, so one of them is the dividend omission. So they found that, okay, before the announcement day, so announcement day is zero here, okay, right? And then before the announcement day, the stock's price is actually moving in within this range, right? Between this range. But after the announcement made on the announcement day itself, we found that the stock's price what? Quickly respond to this information that is dividend omission. And then after that, it's um, moving within the range, right? Constantly here, we can say that, right? So that means there is a quick response in the stock's price when the company make a dividends omissions announcement. Okay, another events, right? That shows that the stock's price reflect or react quickly to this event study or announcement is what? Earnings announcement event, mergers, right? Capital spending, the issuance of stock. When the company make an announcement of issuing new stock, right? The stock they found that the stock's price quickly respond to that announcement. Mergers, when the companies make announcement to merge with another company, okay, or take over another company. So the stock's price quickly respond to that information. All right, they found that the stock's price quickly respond to that announcement. Earnings announcement as well. Okay, right. So this study generally support the view that the market is semi-strong form efficient. Right. Okay. The next one, another study, right, to justify the semi-strong form is the record of mutual fund. Right, the record of mutual fund is a study to see whether the fund managers can beat the market or not in the semi-strong form. Okay, right. If the market is semi-strong form efficient, then no matter what publicly available information mutual fund managers rely on to pick stocks, their average return should be the same as those of the average investors in the market as a whole, right? So that means the study shows that the fund managers, mutual fund managers, cannot beat the market by relying on the informations that are available in the market because the informations are already included into the stock price. So we can test efficiency by comparing the performance of professionally managed mutual fund with the performance of the market index. So this is what I mentioned just now. We want to see whether the mutual fund managers can beat the market or not, or can help the investors to make an extraordinary profit or not. So the findings shows that they do not outperform the market index. That means they cannot beat the market. Or in other words, they cannot help the investors to make an extraordinary profit. So therefore, it is consistent with the semi-strong and weak form efficiency. Okay, right. When the market is in the weak form, semi-strong form, and strong form, right, we know that the stock's price will always at a correct price. Okay, the stock will always at a correct price or will always at a fair price. So that means the investors can only make a normal profit. Okay, so here it consistent with the theory of the market efficiency that is for semi-strong and weak form efficiency, where the mutual fund managers cannot outperform or cannot beat the market by relying on the information available in the market. Okay, so this is the result shown on the slide. Okay, the next one inside, the test for strong form. Okay, strong form test here is to determine whether the investors who owns inside information or who obtain the inside information are able to earn abnormal returns or not. Right? If they can still obtain an extraordinary profit using or based on the inside information. So that means there will be what insiders trading. So therefore, right? So therefore, the strong form efficiency does not seem to be substantiated by this evidence. That means, why is it strong form cannot be exist? Okay. So the result here, when they study the insiders trading, right? They are studying the insiders trading. What's the meaning of insiders trading? They study or they examine whether the insiders trading here can give the investors an extraordinary profit or not. Okay, so the result shows that okay, the insiders trading or the corporate insiders do earn abnormal return. That means they can still earn abnormal return or extraordinary return or profit, right? So therefore, we cannot say that strong form can be exist. Okay, so this evidence provide these findings here provide evidence that contrary to the strong form efficiency. That is, no market is strong form efficient. Okay, why is that? Because the insiders trading still exists in the market, where the investors can still make an extraordinary profit using the inside information. Okay, right. Okay. So I guess that's all for now. Okay, for the second part of the lecture on the efficient market hypothesis. So later on, I will continue with this behavioral challenge to the market efficiency. Right? Thank you, class. Assalamualaikum.